Hello, my name is Richard Foster. I'm one of the current members of the Long Meadow Select Board. Joining me today is another Long Meadow resident, Mr. Joseph Martins. Through a three-part series, Mr. Martins is going to provide educational opportunities and awareness on home financing and the total cost of home ownership. I believe you'll find these sessions very informative, educational, as Joe explores a variety of critical steps in the home buying, financing, and maintenance that quite often you may not be exposed to the proper degree. At the end of the session, we'll be providing you with email addresses for both Joe and myself, so you may do some follow-up questions. As I say, it's going to be a three-part series, so we'll have the opportunity to come back and meet you again and answer some of the questions that may have come in from the last session. So please, Joe, could you tell us a little bit about yourself?
Thanks for having me here, Richard. My name is Joe Martins, local Long Meadow resident, and I started out in high tech doing a lot of consultative educational work and wanted to bring that to bear here in the mortgage industry because there was a real need for it, and I started out doing loan origination at a very large bank, and now I'm doing education in home financing at a small local lender. And my goal is to help people to understand the home financing and ownership process from the financing perspective. Too often, I think they're going into these situations with lack of preparation or just not enough information to make it less stressful and smoother for them.
Okay. Joe, you have an abnormal passion for this because I understand in talking with you that you do these similar type of public service announcements and presentations at senior centers and different venues around our community. Can you give me a little insight as to why you have this passion?
Sure. As I mentioned, I started out with origination, doing actual loan applications from app to close for home buyers. And one of the things that I noticed was that too often they would come in with a purchase and sale agreement in hand, and they hadn't done the preparation really required to make sure that that purchase and sale would ultimately be a success. There's a lot of work that goes into determining whether or not you can actually successfully obtain financing. And if you're not prepared for that, that's what makes the process stressful. That's what makes the process not as smooth as it could be. So I want to help folks in the area understand what it takes to be a little smarter about, be a little more prepared about home financing, so that when they're ready and they're either refinancing their home or they're buying a new home, that they can do it in a way that's not going to be quite as stressful and ultimately will get them what they want and as smoothly as possible.
Okay. Now, Joe, I understand there's a lot of things in current laws where we have the different relationships with the brokers and with the financial institutes, but I think what you're saying underlying is that the public education is extremely important in this. You have to educate yourself on this process to make sure that the professionals that you're dealing with are fulfilling all of the needs for you and your family. Is that correct?
Absolutely. And while there are hundreds of programs available around the country, there are home buyer education programs, and there are also counselors and other resources. A lot of folks today, they're still not making full use of them because many of the people that come into me, again, they're not prepared. The other thing that they're doing is they're going online and they're reading articles that weren't necessarily written recently. And they're asking for opinions from friends and relatives who went through the process, but they don't realize that financing is unique to them. It's like a footprint. And the financial institution is looking to go through the different aspects of someone's financial circumstances and personal circumstances to try to establish that profile for you as an individual. So what my dad did last month for financing or what my coworker did last year for financing isn't necessarily going to be applicable to my circumstances for the piece of property that I have in mind. So it's very important to get educated about what that means for you as an individual, and that way you're armed with the right information, accurate, up to date about your circumstances.
So you're saying a financial footprint is a very individualized process.
It's like a fingerprint, and it even changes over time in a sense. Unlike a fingerprint, your footprint at this moment in time is not the same as your footprint 1 month from now.
On a scale of 1 to 10, how important is it for you to be fully aware of your financial footprint?
Very. I would say a 10, simply because at any point in time, the things that you do as far as employment, as far as the way that you save or spend, how you save your money. Are you saving it stuffed in a mattress or putting it into a bank? A lot of those play into whether or not you can successfully finance a home. And they're not intuitive necessarily. Until I got into the industry, many of the things that I thought about financing, I didn't realize they were simply incorrect. And afterwards, I realized, wow, there are many, many regulations and rules and requirements that start at the federal level and the state level and down to investors and lenders themselves, governing precisely what kind of information needs to be gathered and how it needs to be assessed.
Okay, you had talked to me recently and showed me a chart that you had that outlined the steps that you recommended a person go through. Can you talk a little bit about this process, this charted process that you had?
Sure. So I call it the home buying experience, and it walks home buyers and homeowners through the process from start to finish. The workshop being the very first part of that process, going to some educational resource to learn about the financing process itself, but also to learn about how it applies to you as an individual. And then I walk them through two aspects of it. All of the activities that they're going to engage in that's related to the property that they have in mind, whether it's property that they already own or property that they're intent to buy, and their relationship with and the activities that they're going to do with the lender in terms of the financial process, gathering their documentation and going through that documentation through application and so forth, all the way out to the closing, which for most types of applications represents the end of that process and the beginning of now the home ownership process and all the things that entails, like making sure that you can sustain that home and not run into a situation where you have to avoid foreclosure or issues like that. And as you can see in the chart, the home buying experience, it starts with the workshop and gaining that educational experience. And then the very next step, and this is where a majority of people, I don't want to call it a mistake, but they engage realtors or they begin looking at properties before they even know what their financial circumstances are from the perspective of a lender. And by doing that, it's a bit like going into the mall to go shopping without your wallet. You don't know what you can spend or if you can afford that amount from the perspective of a lender, not your own perspective, because generally we don't know what the rules are on our own. So the very next step in that process is to be able to get pre-approved with a loan officer. It doesn't have to be because you're going to make a purchase next week or that you're planning to refinance this month. It should be a preparatory step that you can do months in advance. So whether or not you're buying in a week or you're buying 6 months or a year out, a conversation with a loan officer helps you to understand what your circumstances are. It establishes that financial footprint so that then you have marching orders. What do I need to do to go from where I am today to where I need to be in order to accomplish my goal. And you can learn things, for example, about your employment. What's your employment situation today? What is your employment history? What kind of assets do you have today, and what kind of access to other assets might you have, whether it's available through state programs, available through seller concessions, available through contributions from family, typically gifts of cash. You can also take a look at your credit and credit history. People get focused very much on their credit score. The score is important. It helps establish which kinds of programs you might be eligible for. It also helps establish to some extent the kinds of interest rates that you'd be eligible for. But ultimately, it's that credit history that you want to know, where is it today, and what kinds of things do I need to do to make sure that that credit history is in good shape by the time that I begin the financial process, the actual loan application, whether it's for the refinancing or for the purchase.
How important would you say it is on a homeowner attending a homeowner workshop?
Very, very much. It's, as I mentioned before, it's available from many resources. I mean, I do one as well, but that is your primary line of defense. It's your primary source for understanding all of the different aspects, some of which we're going over today, but all of the different aspects that are involved with a purchase or a refinance of a property.
And unlike the internet advice, which has value, if you're getting a local home owner workshop, you're dealing with local information, up to date, current for your community, over the internet, which is very generic many times.
Absolutely, because the internet, when information is published, it has a timestamp, it has a date applied to it. And if you look, for example, on YouTube at videos that folks have recorded in the past about FHA, their information may in fact now be out of date because it was recorded in 2012 and the rules have changed since then. So it becomes a source of a lot of information, but it's difficult to vet what information is accurate and what is up to date. And typically with the home buying workshops, many times what you're dealing with is, it's delivered in real time and it's delivered using the latest information. So if rules have changed last week, those new rules are incorporated into what is being described to folks in that current class. Another thing to think about is when you learn the basics today, it doesn't hurt to brush up again when you're ready. Let's say you're planning a year or two out to buy a home. It doesn't hurt to go back and brush up on some of that information a year or two out, simply because it may have changed. The basics won't change, but there are a lot of pieces of information woven into that fabric that absolutely do change over time.
Okay. Now I noticed in the chart that you put up on the screen, there was two sections. There was one section on the right hand or on the left hand side says with the realtor, and then there was another section that had points with the lender. Do both of these events take place simultaneously when you're going down this list?
Absolutely, they're occurring in parallel, and it's important as a borrower to do your best, despite the fact that you might not fully understand the process, despite the fact that sometimes things can be a source of frustration and stress. It's important as a borrower to keep the momentum going on both tracks. So on the property side, if you're in the case of buying a new piece of property, if you're engaging a realtor, if you're engaging an attorney, going through the process of finding a home, negotiating, signing the purchase and sale agreement, doing inspections, making sure that you obtain insurance for the property. All of that is done in parallel while the lender is reviewing your application, requesting additional documentation, and so forth. So you definitely don't want to think of it as a sequential process so much as multiple things happening simultaneously with different professionals in your team. And you really want to think of those folks as part of your team. your loan originator, your underwriter, attorney, real estate agent, home inspector. They're all part of a team of people that are basically trying to make it successful. Whether you're trying to, again, refinance or you're trying to buy a home. And they're all doing things in parallel.
Right. Now, I'm going to give this back to you because you were using it as the bullet points to make sure that we don't leave something out. So I'll let you go back and talk about your process or the schematic blueprint of the process that homeowners should be going through.
Okay. So the first thing that I advise folks to do whether you're looking to eventually refinance or you're eventually looking to purchase, is to put together a folder that contains all of the key documentation that's going to be important in that financial process. There are three aspects of it. There's your credit, your assets, and your income. On the income side, for folks who are employed by someone else, W-2 employees is how they're referred to they want their last 2 years of W-2 statements. Won't necessarily need the tax documentation unless those individuals receive any kind of bonuses or other compensation, like someone who's paid on commission, where there would need to be additional finances. But doesn't hurt to include the last 2 years of your tax forms as well in that folder. In addition to that, if you're self-employed, you absolutely want the last 2, maybe 3 years of your 1040s or your Schedule Cs, K1s, depending on what kind of business you've created, corporation, LLC, and so forth. But you want the last 2-3 years complete documentation. Absolutely important that nothing is missing. If there are multiple schedules, must include everything. And while it's not necessarily a requirement anymore, it helps to have everything signed. So the signed copies of these documents. You'll be asked to file a transcript request with the IRS that will be filed on your behalf. That will obtain, because it's the rules, that will obtain the official transcript of everything that you had reported to the IRS to substantiate everything that you're presenting as documentation. So on the income side, W-2 employee, a couple of years, self-employed, a couple of years of tax documentation, 1040 schedule, K1, C, and for anyone receiving other income, Social Security, pensions, any kind of royalties, what you want is documentation that supports, typically it's called an award letter, but it's the documentation that shows what you're receiving and with what frequency and so forth. It'll basically help provide a history of what you're receiving as well as a predictable future 2-3 years into the future of your income. So income documentation, very important to keep in the file. In terms of assets, you want to have at least the last couple months of bank statements full. No pages missing. A lot of bank statements will have blank pages. Believe it or not, you have to include the blank pages as well. So you want complete bank statements for the last 2 months for any account that you would want considered as part of your assets. Generally, it doesn't hurt to put them all in. The loan officer that you work with will decide what is needed in order for you to accomplish your goal. They may only look at 2 or 3 of the accounts that you have versus the 7 that are available to them because the others are irrelevant to the purchase or irrelevant to the refinance. But nonetheless, keep a couple months on hand. So that means, if you think about this, this is a rolling requirement. As months pass, update the folder. Every few months, throw in the latest statements. You can either keep the old ones in there, but you really don't need to. You can get rid of them. Credit-wise, you're going to be asked for the lender to pull your credit. That is absolutely necessary. One of the biggest misconceptions that borrowers have these days is they'll walk into a bank and one of their first questions, they'll say, "What's the rate?" And the reality is, it doesn't make a difference what the rate says on the board out front. It doesn't make a difference what the rate said in the newspaper. That's not their rate. It's a number, think of it as a marketing number. Their rate can only be determined once all their documentation is reviewed to understand what their rate as an individual would be. And so pulling credit is one of the ways that that's accomplished. You look at the income, you look at the assets, but you look at that credit history and you look at the credit score. And that helps that financial institution understand what your specific rate would be. And so while you can ask a lender what their rate is, or you'll see a mailing from one of them that says, hey, today it's available at 3 3/4 to do a 30-year, ignore it. Because at the end of the day, until you gather this documentation and provide it to a loan officer, you really won't know what your rate is. So the third part of that package is the permission to pull credit. And I think as a preparatory step, it's very important. If you're buying a home, let's say you're planning to buy in May, and you're speaking to a loan officer now, they're pulling your credit now, they can tell you that this item that appears on your credit needs work. It needs to come off. You need to maybe pay that off, or you need to have that corrected because you're telling me that that's incorrect information, and you don't want incorrect information appearing on your credit report. It's not that it can't be addressed during the financial process. There are times that it can be, but why risk it? Why put yourself in a stressful situation where you're now wondering, oh my God, I signed off on a purchase and sale agreement, and now I don't know if my credit history is going to be worthy of receiving financing.
There used to be a thing that went around. I don't know if it's true or not. I'll ask you because you're in the industry. They used to claim that it was unwise to repeatedly have your credit history checked.
The general, and by the way, this is available online. One of the best resources is called MyFICO, MYFICO.com. And it is a resource that allows you to look at things like credit repair, allows you to it has links to all the different kinds of credit resources. One of the things that you'll learn about on a site like that, and that's I'm not affiliated to it in any way, but you'll learn about the credit inquiries and the impact of inquiries on your report. The first thing to understand is that when you're going for an inquiry for something, for example, a mortgage or for an auto loan, if you confine those inquiries to a period of about 3-4 weeks at multiple institutions, it only counts once on it only dings your report one time. If you spread those inquiries out, so if you go to lender A today, and you wait 30 days and you go to lender B and wait 30 days and go to lender C, each one of those times will ding your credit report. So whenever anyone is going shopping, so to speak, to see what the rates are and to see about getting maybe pre-approval from more than one lender, and they do that, a lot of folks want to go rate shopping, they call it, confine it to a brief enough period where you bring your package in, the package of documentation that I spoke about earlier, you hand that to the different lenders in a short period of time, and that way each one of their inquiries are going to fall within that window, and you'll get dinged one time. And by the way, the reason that is the case is because it's for one type of financing. So if it's 7 banks, all with inquiries about a home financing, that's considered by the credit agencies to be one type of financing. If it's 7 car dealerships, it's considered an auto loan, and so that's one type of financing. So an auto inquiry and a home inquiry, that's 2 different types regardless.
Right.
The other thing to keep in mind, I believe the latest rules, it's 10%, never more than 10% of your credit score, period, no matter how many inquiries that you do. And the other thing to realize is it always recovers. So when you're doing those inquiries, it takes time, but the inquiries will eventually roll off in terms of the impact on the score. They won't roll off the report. They will still appear there, but they will not affect the score eventually. Keep in mind, any inquiries that you do, not only will they appear on your report, but when you seek financing, you will be required to provide a letter of explanation, which is a simple letter. You put the company that did the inquiry, and you can see this right on your credit report, the date and the purpose. And if you don't know what that inquiry was for, just put "I don't know." And then you sign it, you date it, and you provide it to the lender, and that helps them understand what those different inquiries were about. And the reason is because they're looking to see if you established any new debt.
Right.
Because that new debt would play into what we'll talk about later, which does have an impact on whether or not you can obtain financing.
Okay, so I guess the bottom line is that, yes, credit checks can actually hurt your credit rating if they're not handled properly.
If they're not handled properly, if you're doing a lot of them, a lot of different types. But an individual check, for the purposes of what I was talking about earlier, preparatory. Just go to the lender, go through the assessment process, get that pre-approval or pre-qualification, and let them determine. I mean, it's worthwhile, the trade-off of the couple of points that it might affect your credit score, to learn what you need to do between now and the time to get your financing.
A question you may not be able to answer. These credit services you see on TV all the time, get with us and we'll check your credit. Are these going to affect your credit rating if you're employed with these services that are checking it every month for you, or there's constant updates?
It depends. There are hard inquiries and soft inquiries. Some things from some types of organizations can indeed affect the score. One of the things that I did, and I think that most people should actually do this, when you apply for certain types of financing, the lenders that provide the financing are not allowed to sell your information to anyone. However, the credit agencies, the 3 big credit agencies, can indeed sell your information to a third party. And after you apply for financing with an institution, you might notice a bunch of additional junk mail. You might notice telemarketing calls. That's not the lender. That is generally the credit agency just sold your information. And the way to get out of that, and it's actually very convenient, they have a website. It's called optoutprescreen.com, and it's run by, I believe, the credit agencies or a collaborative between them. And basically what you do is you go there, you fill out the online form, and submit it. That will give you 5 years. I believe it's 5 years of, you're basically opting out of the ability for them to sell your information.
Okay.
If you print it out and mail it to them, indefinitely. So you can actually, it's basically your way of telling the credit agencies, no, you cannot sell my information to anyone else.
Okay, so that was an excellent tip that you just brought up that can help people in the future.
A lot of folks don't even know about it. I didn't know about it until I got into the industry and realized that that was a resource. So something I highly recommend for anyone that, you don't even have to apply for financing to initiate this. Just go there, do it. And I'm not saying it will eliminate it, because there are other ways for folks to obtain your information. But in terms of the credit agencies and their ability to sell it, it does away with that.
Okay. Well, what's your next step, Joe?
So now, once you've gone through and gathered your documentation, you've got your income documentation, you've got your asset documentation, you want to go for that actual pre-approval, bring that documentation into a loan officer, speak with them about, let them review it, speak with them about what your goals are. What do I want to accomplish? What's my time frame? And they'll come back with pretty valuable feedback about what it is that you need to do next, if anything at all. If you're in luck, you may not have to do anything at all, but at the very least, what you'll then know is, if your objective is to refinance, you'll know if you can. If your objective is to buy, you'll know how much you could afford in terms of buying a home. One piece of advice I'd have there is, just because when you're provided with a number that says this is how much you can afford, just because you're told that that is the maximum you can afford, most borrowers then, you don't want to push that maximum. If I were told I could afford $250,000, that's basically another way of saying that's at the limit of my financial ability. You want to think about coming in somewhere beneath that. Give yourself some breathing room. Don't, if you're told 250, well, hopefully you can find a home maybe that you like at 200. And now you're giving yourself a little wiggle room, not only in terms of finances and affording the home later when you have to actually make payments on it, but think of it in terms of negotiation. If you're told that you can afford 250 and you start looking at homes that cost about 250 and it's a competitive market, how are you going to offer a little bit more? You're not going to have much room to negotiate. If you're looking at, if you qualify at 250, but you are looking at homes in the 200 range, and you really like that home and somebody might outbid you on it, well, now you have a little bit of leeway to be able to put in a slightly higher offer and be more competitive, because I can tell you, if you're, just as a seller can cause problems by pricing their home too high, a buyer can cause issues by pricing their negotiations too low. You come in too low, there may be another buyer in there to swoop in and take that home. So you want to give yourself enough room in the range that you're shopping in where you're not at your maximum. So now you've established that with the loan officer, and the next step depends on what your goal is. If it's refinancing, you can look at the rates and decide whether or not you want to refinance today. You can, discuss with the loan officer what the best approach to that might be. If you're a borrower or a buyer, you might, if you're looking to buy in May, well, now you can kind of, throughout the winter, work on any issues that came up during that pre-approval process. Anything that you need to clear up in your credit, et cetera, and start thinking about what types of homes. What kind of property are you looking to buy? Each type of property has different criteria associated with it. The type of property that you choose actually has an effect on your financing and your financeability. If you think about, for example, I've had customers where they were looking at a home and they did not realize that that home was in a flood zone and that the insurance for that home was additional. The flood zone insurance for that home would be significantly more than what they thought that they'd be paying for. That insurance plays into their ratios and their financing, and it actually made the home not affordable because the home that they selected, where it was located, what kind of insurance would be required for it, et cetera, affected their financing. Other folks, if they look at condos, they don't realize that, well, because you qualify for 200 on a single family home, a condo has homeowner association fees. That fee is considered part of your new potential debt. And generally that means that you can afford a little less condo than you could potentially a single family residence, because that homeowner fee is consuming some of your income that could have gone toward, let's say, principal and interest. So it is a good time to now start putting serious thought into what kind of property, where do I want to live? Let me find a real estate agent in that region. If you're living in this state and you're looking to move to California, well, you'd want to find a real estate agent that's local to that area and understands it. If, however, you're really relocating, let's say, to Longmeadow from another state, find a local real estate agent here that understands the area, the schools, and so forth, so that they can give you a great overview of, what's been on the market and what might meet your needs, and start thinking about what you want to buy. Start thinking about who you're going to work with in terms of the lender, in terms of the real estate agent, the attorney. One of the other pieces of advice, and this is important because I've had borrowers that come in with their uncle who's an attorney, but he's not a real estate attorney. And that means that that person is not really familiar with the process that goes on in terms of the requirements and the role of an attorney in real estate. And if you are working with someone that's not familiar with the process, it makes it more cumbersome. It can slow it down. It can cause problems because they don't know which questions to ask, or which things need to occur in which order. So when you're looking, for example, with an attorney, you want to work with an attorney that does closings. They understand real estate. When you're working with a realtor, you want to work generally with a realtor that understands the type of property that you're looking to buy. Is it a realtor that specializes in high-end homes? Do they specialize in condominiums? That helps enormously. If you're looking at renovation, there are realtors that have done renovation or helped borrowers get homes that required renovation loans. That in itself, another specialty. A person unfamiliar with it is going to be tripped up by that process. Lender-wise, a lot of folks came in wanting to know what's the rate. One of the things that they should focus on, rather than just the rate, is can that lender close this loan on time? Can they close it at all? What is their history of their success? Because most lenders will have a track record. What percentage of loans close on time? What percentage of loans close at all? Generally, there are some lenders that freely provide it. Some realtors will be able to tell you because their experience with past borrowers, did they have trouble at a particular lender and so forth. But you want to, if you get a great rate, what good is that rate if you can't close the loan? So you want the combination of, hey, I'm getting a pretty decent rate, but I'm also getting the confidence that I'm going to close, because remember, it's that domino effect. If I can't close my loan on time, that seller who's probably buying another property can't get the money from my purchase to then go buy their next property. So I'm holding them up, and they may be in turn holding someone else up and so forth. So it's very important for the process to go smoothly, for those deadlines to be hit. One of the things you're going to realize when you're going home shopping and you're dealing with sellers is that sometimes there's a lot of pressure there to hit certain dates. You have to be realistic about your time frame. Depending on the size of the institution, you can generally see patterns in how long it takes an institution to close a loan. It can range from as few as 2-3 weeks on up to 6 to 8+ weeks, depending on that company. One of the things that you really want to make sure of is that the seller is not, or if you're the seller, that you're not pressuring the buyer into an impossible time frame. If you're the buyer, that the seller's not doing that to you. Because if they say, I want to close in 2 weeks, that's going to be a problem. Everyone has to be realistic. Hopefully that real estate agent will also kind of rein in everyone and say, look, we need minimum 4, probably more like 6 weeks. Let's use those dates for our closing date, for our mortgage commitment dates and so forth, because the lender needs time to go through all the documentation and make sure you are qualified to do this, especially if you didn't previously do it as I had suggested. And then the appraiser needs time. That has to get scheduled, that has to get accomplished and returned and reviewed. The home inspector, before you even do the financing, home inspector is going to need time scheduled to accomplish it, for you to review the home inspection report and then determine if there are any things that need to be negotiated with that seller. So you want to give yourself enough time in that process. And generally, I would say 6 weeks is probably the best number to hit. 4 is it's really pushing it. It's putting pressure on everyone. And if you want to see stress, just try to fit it into a tighter time frame. So you obtain that realtor, or hire the realtor, hire the attorney. You begin. Oh, and by the way, the attorney, absolutely essential in the process. Can review things like your realtor agreement. They can review the purchase and sale agreement. And oftentimes, not all attorneys do it this way, but many attorneys assume that you're going to use them at the closing. So they will actually not charge for some of the things up front, like reviewing your purchase and sale agreement. It's not guaranteed, but speak with the attorney and ask how they do business.
Right.
When do they order the title search? Do they wait for your purchase and sale agreement, or do they do it in advance? Things like that can actually, again, work toward making the process much more smooth, but you want that attorney to be watching your back along the way and making sure that, for example, your purchase and sale agreement have the contingencies for financing and the appraisal and so forth. So you've got that team, you're out home shopping, you know what kind of homes you want to look for. If you're refinancing, you're really not working with this team, you're working almost exclusively with the lender and ultimately an appraiser. But for the home buying process, you're out shopping, you find a home, you I would advise doing a home inspection on it before going any further. It's a huge investment. We're not talking about kicking the tires on a $5,000 or a $15,000 car. We're talking about potentially a couple $100,000 or more that is a long-term investment for you. And so that $400 or $500 or $600 fee that the home inspector is going to charge, think of it as cheap insurance against making a bad decision. So you get the home, you find a reputable home inspector. Typically, there are many different sources that can recommend them, but you can also look online. There are resources that rate the different kinds of vendors out there. And find a reputable home inspector, and they'll provide you with a report that ultimately you can use to determine if you even want to move forward with that home. And then based on that report, you can decide, for example, do we want to negotiate? In my own experience, right here for the home that we purchased in Longmeadow, one of the things that I had to decide is, do I want to press every single issue about that home with the seller? That's it's a decision each buyer will have to make, but you have to be careful with that, because the home inspector may come back and say, here are the 10 things. Now, 7 of them are very minor, 2 are moderate, and 1 pretty serious. What would you like to do? You have to look at that list and say, what can I ask of the seller to still get the sale, to have them still sell to me as opposed to someone else? I had an enormous list, and the reality of that is that it will turn a seller off like that. You have to pick and choose your battles, and we looked at the things that were the most serious, and the seller addressed them. The other things we said, you know what, those could become issues for us, but we'll address them if they come up. That's on us. But we really like that property. Here's what we need done. So I took that big list and I whittled it down to something much more reasonable, and we were able to do the deal. But that's the kind of negotiation that you can do once you have the home inspection. The other thing, seller concessions. When you're putting together a purchase and sale agreement, the seller concession can include many different types of things. It can include property, like an ATV. It can include the barbecue grill out back.
Right.
It could include, I've seen Hannah Montana tickets as part of a seller concession. As a seller and as a buyer, the only thing you should ever allow in that purchase and sale agreement, if there's going to be any concession at all, is financial.
Right.
Will the seller contribute anything to closing costs and fees and so forth? The non-financial concessions cause problems, and the reason is those items you're not financing. When you're buying a home, you're not buying an ATV, you're not buying a barbecue grill, so the bank doesn't want to lend for those items. So now those items need to be valued, which requires an appraisal. And then that needs to be subtracted from what they're willing to finance, because again, they're not financing the purchase of a barbecue grill.
Right.
So on a purchase and sale, what I recommend is nothing other than the typical items, which would be the appliances, fixtures, and drapes. And then financial concessions. Keep the other stuff off of a purchase and sale agreement. It really doesn't belong on there, but it will complicate your life. And that's where it adds stress and it adds time and it makes things more difficult than they really need to be. So you do your negotiation, you sign your what I would recommend before even signing the purchase and sale agreement is taking that offer, bringing it right to your lender. Most lenders can actually begin the financial process before the purchase and sale is signed. Why is that important? It can take a couple days to get the next document.
Right.
Do you really want, what if the rates change? What if they go up another quarter of a point?
Right.
You don't know what's going to happen between now and then. So you bring the offer in. It's a signed offer, signed by you and the seller. Most lenders will say, okay, well, we can operate off of this, but you need to get the purchase and sale to us right away. Meanwhile, remember, things are happening in parallel. You've sent that purchase and sale to the seller, who's now going to decide whether or not they're going to countersign, and you've got your financing already kind of kicked off. You get your purchase and sale agreement back, and you give it to your lender, so that now they have the official document that shows, yep, you know, this is what they're locked in for. This is what the mortgage commitment date is, which is the date by which the lender says that it's going to, pretty much barring no weird circumstances, that it's going to finance your loan.
Well, Joe, you've led us through a pretty good matrix, and I'm sure that the people watching it have already said, oh, I didn't think about that, or oh, I've had trouble with that, because I've been sitting writing some notes myself. There are a lot of pitfalls and benefits in buying new houses or new homes, not necessarily brand new homes. But you've gone through the summation and you've got it down to the point where we've purchased this home now. We've done everything right, and we're in there. Where do we go from there? Is there any parting thoughts on this process of what you tell the person after they've bought their home?
Oh, sure. Well, one of the things is to definitely keep an eye on your credit report. You'll hear folks say to pull your credit a couple times a year and make sure that everything looks the way that you would expect it to look. That's absolutely important because at any time, if you were to go seek financing, you really want to make sure that your ducks are in a row. The other thing is by making sure that you get into a home that's not at your financial limit, you actually allow a bit of a buffer in the case of the recent years where there was an economic downturn. Anybody who borrowed up to their limit found themselves in a pickle. Because now if the economy turns down, maybe you're getting fewer hours at work, or you had to go to a different job, that limit that you were at might now push the ability of you being able to sustain that home. And you don't really want to go to a point of foreclosure or financial difficulties of that type. However, if you find yourself in that circumstance, the very first thing to do is to try to approach the lender about doing either a mortgage modification or any other like refinancing that they might be able to do to help you make the terms that you're in a little bit more reasonable. The federal government has had, and they've extended a great program, the HARP-HAMP program, Making Home Affordable. If your loan is currently owned by Fannie or Freddie, or are insured by Fannie or Freddie, and it was originated or closed, I should say, prior to June 1st of 2009, and you're in good standing in terms of your credit and so forth, they actually have a great, what they call a streamline, MHA streamline process, which allows you to potentially refinance into better terms. One thing I would say about that, don't wait, take a look, see if you qualify. If you qualify, it's something to hop on sooner rather than later. I had folks earlier this year that I was able to reduce rates and give them a better payment, shorter terms than they had, etc. And they said, I'll think about it. Now they've been priced out of that opportunity.
Right.
The rates have actually gone up enough that it's no longer even feasible for them to refinance.
Right.
So generally, if you're in the 5s, 6s, 7s, not that there are a lot of people out there still in that, but there are some. If you find yourself in that circumstance, it's worth going back to a loan officer and saying, hey, can I get into one of those special programs? If not, can I refinance, and what's my financial footprint today so that I can understand what my next steps are?
Okay.
So generally, those are the two things. And then the third is with and we'll talk more about this in the episode about renovation, but with contracting work and with any kind of modifications to the home and stuff like that, try to think about that before you even buy the home. You and I had talked about how there may be easements or other issues with a particular piece of property where folks have a vision in their mind. They think that they're going to buy that property, they're going to put 2 additions onto the house, and they think that it's okay. They don't realize that they need to talk to the town first and find out if that's even possible before they buy the property.
Right.
Because
You took the words from my mouth, Joe, because that was my notes. I wanted to close with that. But I'm glad you mentioned it, because these are crucial things that a lot of times people do not think about. And especially when you're talking about session 2, where we get into making financial decisions for reworking a home. It is far more expensive than a lot of people think it is, especially in this day and age with the current wage rates out there.
Absolutely, and there are programs to help people finance the renovation of a home, but again, if you don't know what the rules are with the town and find out first what is and isn't doable, which, that can have an enormous impact, especially if you have no plan B. If you were dead set on doing an addition to the property and now you can't, well, that's it. The rules are the rules.
Right.
And the most important thing that I hope folks take away from this today is the rules are indeed the rules in the world of financing. A lot of folks think that maybe a particular story, their story, because it is, heartwarming or tugs at your heartstrings, that maybe that will make a lender help them get the financing that they need. The loan officers will go out of their way to try to find a solution. No matter, any experienced loan officer, that's what they're going to do. They're going to try to find a solution for you. But the rules are the rules. And if you don't fall within that set of guidelines for whatever specific products they've been looking at, that's it. There's no personal, it's nothing personal between them and you. It's simply that currently you don't fall within the guidelines, but if you do X, Y, and Z, then eventually you will be within the guidelines and you can accomplish what you want. So, they just need to understand that circumventing the rules, the regulations are designed so that lenders can get in a lot of trouble if they try to bend the rules for you when they can't bend it for anyone else.
Right.
So
well, we talked about being 3 sessions. Could you give me a 30-second preview of what session 2 will involve, what type of discussion is going to take place?
Sure. So generally, for a second workshop, what I like to do is talk about the roles and responsibilities, all of the different individuals involved, and what their relationship is with the borrower or the person refinancing their home, and what you can expect from them and what you really can't expect from them. Some of it we touched on today, but I think it's really important because when I say underwriter, many people don't know what is an underwriter and how does that affect me and my financing. And so it's important to understand all these different roles. That way, when folks are throwing about all these terms, you can understand, oh, okay, I know what individual they're talking about and what their obligation is to me as a borrower and what my obligation is to them in order to get my financing done and my home purchased. And then session 3 is about renovation and refinancing exclusively. There's more to the renovation process than just the standard loan process. It actually, when a loan closes, there are steps that occur following the closing date of that loan in order for the renovation loan to go through to completion. And then refinancing, just trying to help folks who are already in homes today to understand some of the things that they can do to make sure that they're checking all their options when it comes to refinancing, because some people just don't know what's available to them, and so they might be in a situation where times are tough, their payments are really high, and it's like, what do I do? And they do nothing because it's just such a complicated or stressful issue that they perceive. You know,
Right.
they think that this is going to be awful, and they avoid it. There's no reason to avoid it. A lot of folks have taken advantage of refinancing, but you have to go about it in a smart way.
Okay.
You know, so
That was a long 30 seconds, Joe.
that is.
Yeah, that was a long 30.
I'm not known for brevity.
No, I appreciate you ad-libbing a little bit more, and it looks like the next two sessions are going to be very informative. There's going to be a lot of meat to be put on the bones here, and on the people after they've taken ownership and considering doing improvements to their home. Also, they need to consider these things before they buy too, because you have to know if you've got good bones on the property.
Absolutely.
That can do the expansion. So as we started the session earlier, we told that we would give you our email addresses. My address is rfoster@longmeadow.org, and that is also available on the Longmeadow Select Board site. And Joe, do you have an email address you can give us?
I do. It's Joe, Joe, at Moving On Up. That's MOVNONUP.org.
Okay, well, Joe, I really appreciate you taking the time, especially as a citizen, to show interest and take time away from your personal life and your professional life to come in and try to put this information out in I guess, an unbiased format for people to absorb and to think about. I can tell you one thing, I wish I'd had this advice 30 years ago. There's a lot of points that you hit on that eventually you do find out, but it's not a well-paved road to go down,
That's
finding
stressful.
out after the fact
Very,
of
very.
all these pitfalls. So,
Absolutely.
as I say, I'd like to thank you, and I look forward to sitting with you for the next two sessions. And folks, if you have any questions whatsoever, you have our email addresses. You can get in touch with me, and I'll kick them to Joe, or vice versa. Joe is the expert. I'm a conduit. So, and we'd like to thank you folks for watching today, and we hope that you will take something away from this session, and we look forward to giving you the next two sessions.